Welcome back to MIG Liquidity Edge. In this video, we'll be running through a quick trade recap. It is currently Sunday the 8th of March, and we'll be starting from, well, we'll start backwards from Friday the 6th, and hopefully we'll get all the way to Monday. ASMR, love that for us. Okay, first run through of our settings. Swing length is kept at 5. If you drop it to 3, you'll get more zones. However, they won't necessarily be as strong. So if you're starting out, keep that at 5. Invalidation basically means if you want a zone invalidated and you change it to close, that basically means price needs to close through onto the other side as opposed to wick through to invalidate it. I keep that on wicked. Show nearest as 20. We've capped it at that so that we can manage our back end, and extend bars to 100. Now, and volume source for our depth flow dominance, our volume source, we like to have a higher time frame with a lower volume source. So for free users, you can keep that at 1 minute. That basically gives you a far more in-depth breakdown of buys and sellers. If you do have premium, which isn't required to use the tool, you can actually change that to 10, 15 seconds. And now you can see we actually changed to a deeper understanding of that actual zone. So now we've got buys at 63%, sellers at 37%. When you keep it at 1 minute, it tells you the basic. The buys are in control. It's as simple as that. When you get down to that lower time frame, changing the dominance to 60 can help you very much. And then just our basic sessions area. Okie doke. Now, my first set of trades normally throughout the day is that pre-market, pre-9:30 push. All right, I like to go over to a 5 or 15 minute chart. Look for zones that are already made up. I will actually start looking at the chart at around 8:30. So we have a really nice zone here. I like to draw this out and then go down to 2 minutes or 1 minute and see which zones layer up on top of that. Okay, very nice rule of thumb is NQ actually likes to adhere to whole numbers, the 24,600, 24,650. You as a trader, psychologically, we like to go for those whole numbers. It makes setting our take profits and limits far easier. And you will always see watch price. Price will always get to a whole number, show a quick retrace. If you want to take 5 to 10 points quickly, you can. So for my aggressive entries, quite easy, 2640, 2650, 2620. That's all of those in that area. I've got a 5 minute liquidity zone for buyers kicked in, and I've got a 2 minute. Go down to my 1 minute to manage my trades and look for that first push. There's our first push. Okie doke. If we wanted to be super aggressive, we could have taken those 20 points drawdown and just taken a 20 to 20 and closed off on our take profit right there. I'll like to hold it going into that New York Open. Now, if you didn't want to take that aggressive entry, a really good sign of reversal is seeing a brand new control block actually show up. So now we can actually see buyers kicking in here. If that level holds and a new zone is created, that tells us there's a very strong chance of reversal, and we'll take the trade on the second block. Okay, because if you think about it as a bunch of soldiers, that means that this buy level is held up and protected by the new one that should be created. So let's see. There we go. So what I can do, if I didn't take that first entry, take an entry right here. Kicked in very nicely. I think there's around 6 points of drawdown on this, and my take profit will be at the next level of liquidity, exactly the same way you would do on deep charts, Sierra charts, or order flow. We look for this high volume, high liquidity, collated areas that is up here at 42k, and take profit here, right? If you want to take the exact same thing down, or you missed that, rule of thumb, when you have 2 zones like this, look for the one with the highest amount of volume. Who has the most amount of people within that area? You can clearly see that 42k is greater than 4.2k. So if you miss this initially, price never moves in a linear direction, unless there's news, red folder news, which we don't necessarily trade. And you could have placed a simple sell limit up here. Either place your stop loss at the guide or 10 points and go for that next low or the last wicked area. And you would have got a really nice 1 to 5, 1 to 6 there. There you go, as you can see. Now, I expected a reversal coming into New York, and the only reason being is because we can clearly see, with the current political warfare going on in the Middle East. I live in Dubai, so shout out me. But also we can see liquidity. Solid strength of sellers coming in. So I'm expecting now, going into New York, we'll get a bounce before we find that continuation, if there is a continuation. Okie doke. We'll skip through here. Skip through. I get a load of questions in regards to what do you do when 2 zones are next to each other. So if we can find one here, This is a fantastic trade. Price would have wicked back down, taken everyone's stop loss out. If you trade I shit T and, oh, there's a nice little FVG here, I'll quickly take that, you would have got fucked, respectfully. We would have just waited. Simple as that. New area kicked in, buys kicked in. On order flow, that would have looked like just shitloads of bubbles kicking in. You know when you see those big blue, big green bubbles, pew, pew, all of that shit. I still trade it, nonetheless, institutionally. We could have taken this 10 pips, 10, there's 10. Literally 0 tick drawdown on this. Really nice reversal and kicked in. I believe if you trade I shit T, you would have said, oh, there's a nice little FVG block here and this got inverse, let me buy it. You would have taken 60 points. If you didn't and you tried to hold up to here, you would have got wicked out, stop loss hit, or trailing. We can wait. We can wait. Price bounces in, kicks up. Let's say we missed that. Oh no, I missed that. Another zone is printed. You can see here it comes back in, and this is how we can actually catch that trend. We don't need to anticipate what the trend is or draw lines on the chart. Quite simply, we've got 2 blocks at the bottom, one that I can see at the top. We're in a buy trend. Can I try to catch that trend? And yes, you can. And I would have just taken mid of this wicked candle up here. So let's see. There we go. Literally picture perfect. Still can't push it. Okay, and now we get into this area here. 2 zones have been created. As I said, we were already in a range, and this actually confirms it for us. 2 zones were created, and very, very close to each other. Very similar in volume, 21K and 18K. So all I'm looking to do is see which one breaks, which one invalidates, and then I'm looking for a continuation trade. Okay, so if I'm stupid aggressive and I'm trading and I'm scalping on my personal accounts, yes, I would have taken a buy up here, sold it up here, sell down here, take it down, see which one trails, see which one breaks. If not, and you're trading your evaluation or your past accounts, wait to see which one breaks first. The buys broke out first, and the reason being is because 21,000 is greater than 18,000, and it's literally as simple as that. Okay, and now I'm looking for a possible continuation. Place my sell limit here, or I can place my sell limit here and get a continuation back down to this area if I really want to hold. Okay, at this point, 10 points in, I would have just moved into stop loss, but for the sake of the video, we'll see what happens. Now the question is, why did this one hold stronger than the one below it? Because the volume was higher. It's as simple as that. If you took your 20 points and walked away, you would have been great. But we've gone back up into that ranged area. If I want to take this trade now, so let's go back. Let's trade it the way we should trade it. Sell limit here. And let's wait for us to get kicked in. There we go. Stop loss would have been placed at the top as expected. And go for a 1-to-1 or a 1-to-2. Up to you. So that take profit would have been hit. I'm not trying to get back into the same area. 21K is very strong. Now, when you have an area that's this big, what I tend to do is look left and see where are the wicks actually made up. Okay, if I really want to be a degenerate, what I would have done is, and I believe we took this trade, take 24880, and remember what I said earlier, take 24900. Let's take that 24900. Really nice, placed up here. Get a nice round number. Would have just missed our 24900 because it placed out onto this wick. But we're into this trade now. I wait for it to break slightly lower, and then we can move into break even, 750 closed. And our first take profit can be at that liquidity zone. As you can see, played out very nicely. Even if you lost those 10 points in that middle volume area, look for the one that's highest. Take that. That is the strongest. Okay, what I would have looked to do now, we're getting to that New York lunch. So what we can look for is trying to push this trade as much as we can down here. Move our stop loss in. Because remember, as soon as we get to break even hit, once we get to our 3 p.m., our 3 p.m. should see power hour reversal, 3 to 4 p.m. And there you go. As expected, we're bullish for the day, ranged, broke down. If I can get a nice little trade down here, I'll take it. If not now, with such strong selling momentum, I'm going over to my higher time frame, and this is where I expect our next buyers to kick it. Okay, if I go over to Thursday for a quick trade recap as well here, just so we can run through it, 9 a.m., go over to our 5-minute, very bearish from here. Look at this area, take that wick, for a conservative entry, take the sell for a very aggressive entry. Go down to, let's go to 15 minutes in fact, because there's so much space. Look at this. We have a zone made up 62,000, 544,000. Price won't just crash immediately through it. I can also see on a key level, really nice wicked area on a previous New York low on Wednesday. This is Thursday, so the day before. I would have just looked for that continuation. Oh, I didn't see that zone up there. Nonetheless, we'll take that trade. Love that for us. I want to see that bounce kick in. There's our bounce. I should have gone trade management on the 1 minute. There's our bounce. We can clearly see after this very strong bearish day, we get to our 2 o'clock as expected, and we see our first buying push. If you missed it, you could have tried to take the continuation. And then we finished off with a ranging day there. Okie doke. If we look back at the day, we would have had, on a 1 minute, not many continuations. In fact, we would have had a continuation up here at 10 a.m. We would have had that very clean Asia, London. Let me actually go back to it. Asia, London, and a sell liquidity zone. 5.9 against that 3.2. Risky trade for me because we've got that 93k, 13k full buyers potential. In fact, what I'll do is I'll buy into that area. Take my trailing, because that's a very strong trade. Knowing that I've taken this take profit, take my sell off, and then go for first TP here, or the wick. And then our next TP back at the low. Top tick, bottom tick gurus, shout. And we love to see it. Okay, and let's